Hi everyone, it's Chris here from Serene Education with the forthcoming week's analysis. This is the 13th to the 18th of September 2015. Going to be looking at the four majors. We'll start with the euro against US dollar on the weekly. Let's have a look and see how last week panned out and what we can expect looking into the forthcoming week. So, euro, we saw some positiveness coming through last week. A lot more positive sentiment for the euro as the week unfolded. Slight pullback to start with for the start of the week, but however, euro gained in momentum throughout those 5 days of last week and subsequently reattempting the current resistance level highs that we've seen through most of 2015, which just brings us back towards this 50-period moving average, in fact. And so what we're looking for ultimately, you can see still further consolidation within this negative trend as such. So if I just pan out, I see you guys can see the overall negativity since 2014, in fact, to the lows in March, April of 2015. Right down here, you can see that price has failed to make any new lows recently or from that time onwards. So effectively what we've seen over here is almost a flag pattern. Price has just moved back on the wedge, and we're seeing more positive sentiment coming into the market now for euro and moving price higher, which is leading to less selling sentiment coming through over the last couple of months, in fact. So if you look at the actual matrix over here, you can see a lot more negativity coming into the monthly chart now. It has been predominantly looking negative, but you're starting to see a number of things that are panning or telling us that there's a further consolidation, that we might see further bullish sentiment coming in. The parabolic SAR, for example, has now crossed from above price to below price, now supporting, and the R squared is still remaining positive on that front. So negativity, and on the weekly, you're seeing also a change around in terms of the positive strength that's coming through in the weekly time frame, which has led to this consolidation. So now, effectively, if we had to get a genuine change in market sentiment from effectively what has been negative to positive, ideally we need to see this current resistance level that has been the 2015 support and resistance level being broken. So I'm just going to apply the pivot levels on here, the monthly and weekly, just to see where everything else stands for this time being. You can see the monthly pivot where price is trading right now on the close of the weekly candle. So you can see trading above that level again, and the prior 2 weeks we're actually trading below it. So price is trading within this consolidation, and you can see the monthly pivot is pretty much smack bang in the middle of it all. Ideally, if we are to see any further highs, if we are to see any further continuation of positive sentiment for the euro, we need to see price trading above the monthly pivot as it stands over here at the moment at 1125.91 and change, staying above that level, so we can see price reattempting the highs, the monthly R1 levels, but effectively the 50-period moving average, which is coming back into play as we speak. It'll be interesting to see if we can see any data this week that could actually point to further bearish sentiment for euro or positive sentiment for the US dollar. The one thing that comes to mind is the interest rate announcements for the US market, and there's a forecast for an increase. That's the most important part of it. Over the last number of years, we've seen the US market trading at an all-time low. And if I just go to the Forex factory just to show you that, and I just pan all the way down here to Thursday of this coming week, you'll notice the Fed fund rate. If I just bring up the graph, you can see since 2009 it's been sitting at 0.25%, and the forecast is for a 0.25 basis point move to 0.5%. So that could be the interesting part to look forward to this week for any US cross related pairs, is the forthcoming federal fund rate announcement at 7 o'clock GMT on Thursday evening. Very, very important, because if that does come out as expected, we could see some further positive data coming, or movement coming into the market for the US dollar, which will then have an impact on any currencies that we're trading against. So looking at the daily now, just go down to the daily, you can see that we've seen a lot of volatility creeping into the market over the last couple of weeks and stuff. But looking back to this week, last week we saw further bullish bias coming into the market, and by the close on Friday we saw prices breaking the prior resistance level highs from the previous week. So bullish sentiment coming into the market again. Will the Thursday data put more emphasis on positive data on that. So they're again looking to see further commitments to that. So if we just go ahead and apply the weekly pivots on here just to see where the weekly lies now, so we just change that. There you go. You can see that the weekly pivot's below price. So clearly price is trading above both levels at the moment now, which constitutes that we should be looking for a bullish bias for the euro against US dollar. But as I mentioned too, there's a lot of important data coming for the US market this week. Could that have an impact on price action as we speak? So as long as it stays above the monthly and weekly pivots, look for positive upside. Having said that, the data at the end of this week could have a fundamental input on what happens going forward. So vitally important. Just going to move on to sterling against US dollar. Here again, having a look at the weekly chart, you can see we've had a total change around. We had a nice breakout 2 weeks ago, a bearish engulfing candle breakout. What we were looking for, because price was actually just moving sideways, no real momentum as such. But then we had a nice bearish engulfing candle, which told us that there was genuine sellers back in the market again at the underside of the institution moving average, which is another clear sign of resistance on this particular pair for 2015. And subsequently, we saw a drop 2 weeks ago. Having said that, last week we were expecting to see a continuation of that drop. So look for Monday, Tuesday, Wednesday, Thursday, Friday of last week to continue that selling sentiment. That failed to materialize. And what we saw was the sterling growing strong against US dollar from the word go from Monday, Tuesday, Wednesday, Thursday, Friday of last week. And subsequently what we have now is an engulfing candle. So we had a lot of selling, then a bullish candle. Having said that, now that candle now has taken us to the 20 and 50 period moving average at the underside, which was in fact before a support and resistance level, which happened to be this consolidation support and resistance. So here again, this could have just been a breakout, a pullback, and now we could expect a continuation. And that continuation could come off, listen closely, come off what could be the ultimate outcome on the US dollar rated news this week. We have some important data out for sterling at the start of the week. In fact, we've got the CPI year-on-year figures. And if you look at the CPI year-on-year figure, ideally we want that inflation level to remain above zero, but to be growing. And if I just show you the graph, you can see that inflation has dropped. 5% is ideally where they'd like to keep it. We've been to that level in the past, back in 2008 and 2011, in fact, was around about 5%. And subsequently, since 2012, it's dropped significantly. And at one stage, we're trading below the zero level. So inflation was actually below zero. Not really good. And what we want to see now is that moving higher. And you can see now over here on their figure, they're expecting a contraction back to zero again. So not a really good sign. That could bring a bit of negativity into market if that figure actually comes out as expected, that forecast. If it comes out lower than that, that could have a major impact on price as it is. Then we go down to Wednesday. We also have some important data in terms of the average earnings index 3 month on year. We want that to be growing, and then slight increase there, which is good. Then we have the Claremont count change figure, and over here you can see that in fact that has been below, more activity below the zero level than above the zero. What we're looking for over here is this figure to continue to get negative, in fact. So that, as long as it stays like that, then fantastic. But the most important one is going to be, as I mentioned to you, come Thursday evening. In fact, that's going to be quite important because of the US Fed fund rate. So there again, look to that level to give us an indication. And if it does come out as expected, that could play heavily on the price of sterling against the US dollar. So this could be maintain a significant resistance level, and we could see a continuation from the breakout levels, and we could be looking ultimately towards these levels down here, which were the lows we saw at the latter part of March of 2015. So effectively, the lows of last week, effectively to that level, you're looking in excess of 570 odd pips. So more than enough genuine return on time invested. So here again, vitally important, just stand aside, have a look and see how that's the figures come out for the following week to really give us a general direction going forward. And what I'm going to do now is just apply the pivot levels on here. Monthly pivot above price, which is good, because if it's negative, then we want to see price below the monthly pivot level. Perfect. But you can see how the monthly S1 level has definitely come in to actually support price. It's been a viable target in the past and a viable support last week, in fact. And price actually targeted back to the monthly pivot overall end of last week. So now, effectively, are to see any further selling, we could be looking back towards the monthly S1 again for next week if there's still genuine negative sentiment for sterling as such. If we go ahead and, apologies, if I just go ahead and click on the indicator box and just get down to that all important daily time frame, there you go. You can see that the weekly pivot is way down here, the monthly pivot over here, and you can see that now what's effectively happened is price is now trading between those 2 points. So effectively, this becomes a no trade zone, primarily because we've seen a pullback. We saw a nice bearish engulfing breakout on the weekly. We saw bullish pullbacks the whole of last week, in fact, which has now taken us back within that range between the monthly pivot and the weekly pivot. So when price trades between those 2 points, effectively what happens is it's primarily telling us that there's a lot of indecision in the market, because we've seen an aggressive move low and then an aggressive move high again. Effectively, that's exactly what's happened over the last 2 weeks. In fact, a lot of selling's come into the market, and then ultimately what's happened last week is a change where prices move back again aggressively. So now it's back between the trading back above the weekly, but not so above the monthly. It's still below the monthly, so it's trading within that range level. So just trade with caution. There again, as I mentioned too, there's a lot of data coming out this week, and the most important one is going to be Thursday because of the expected fund change. A forecast for a 0.25% increase in the interest rate, which would have a knock-on effect on any of its major currencies going forward. So US dollar, Swiss franc, just going to look at this particular pair. Not being a really good one to trade, honestly. Anybody out there looking to trade long term, overall, not a really a hell of a lot of growth, to be honest with you. One that I haven't physically traded myself. The overall, the matrix on the bottom here clearly still paints a bullish picture, but you can see a lot of uncertainty creeping in on the smaller time frames. And if you look at price action just recently, we've seen a lot of positiveness, but that's all been eroded, and we've seen price coming back into the market again. Here again, what happens at the end of this week, the following week, this new week that we're coming into, what happens on Thursday would have a genuine impact on price action going forward on any of its crosses. And if you look at the overall intermediate trend at the moment now, you can see that we haven't seen new highs recently. Each time she's bounced, she's failed to make a new high. In fact, this intermediate trend is still pointing to the downside. So effectively, we are to see any further positiveness going forward, i.e. to see price reattempting the 2015 start, January highs, early start 2015 here at 10142 and change. Then we need to see a nice bullish breakout of the last month's resistance level highs to really give us an opportunity to trade to those levels. So getting above the 98311, so that level there in particular, would lead to further opportunities to the upside. And ultimately what we could be looking for is back to those levels that we saw back in late 2014, started 2015 in fact. So here again, do your due diligence, wait patiently, because as I mentioned to you, the outcome that comes out for that interest rate announcement next week would have a major impact on any currencies that are US dollar favored. So there we go. Price is above the monthly pivot, which is good, fantastic. The overall bias long term is to the upside, so ideally we want to see that trading above the monthly pivot, and clearly is so. The downside is you can see that last week we saw pullbacks, so a lot of buying sentiment coming in for the US market against the Swiss franc for most of the week, but by the close of last week we saw sellers coming back into the market again, and that's now coincided with this intermediate negative trend. Okay, so clearly if we are to see any further upside, look to what comes out on Thursday to give us a clear direction. That will have a significant outcome on price action itself, and that would in fact give us a probability of where price is likely to go to, especially for the remainder of September in fact, but going into the latter part of 2015. So here again, just be patient and wait for that outcome. Last pair is the US dollar Japanese yen. A lot of consolidation. We started 2015 on a high point where we saw price making new highs, and then straight away that momentum was eroded, and price just went into this consolidative range, and not breaking the 2014 high, but using as support and then reattempting the highs that we saw back in May. But that ultimately didn't stick, and what we saw was the US negativity coming into the US market over the last couple of weeks, which has forced price back below the current support and resistance level for the end of 2014 and the start of 2015. So here at 121.59.6, price is trading below the level again, She's actually broken below the 20-period moving average for the first time in as many months, and you can see clearly that the 50-period moving average has been a significant support for price recently over the last 2 weeks or so. So here again, further failure to make new highs would have a definite knock-on effect, and price would then obviously pull back. Having said that, we are, as I mentioned to you already a number of times, we got those major news announcements that are coming out at the end of the following week, and that could have a major influence on price action going forward. You can see the monthly pivot acting clearly where that end of 2014 was and the start of 2015. Price is above it, so price clearly below that level, so not a good sign. We want to see it above it if there's genuine US dollar strength against the yen. That's not actually happened over the last 2 weeks as negative sentiment has come in against the yen, which has pushed us below the monthly pivot. The actual supporting factor over here is that the 50-period moving average has been a definite support of price recently. So here again, just want to have a look and see where the weekly actually stacks up. So I'm just going to change that figure. There we go. So straight away you can see that price is trading not only below the monthly pivot, but also the weekly pivot. So here again, negativity. Having said that, perfect. We should be looking for selling buyers to come into the market. The one thing that hasn't worked against us is the fact that we don't have any red arrow candlesticks at the moment. We do have a red arrow. So part of our template is stacking up, but not all of it. And ideally what we want to see is all of it really pretty much moving in line with each other. Once you move down to the daily time frame, you can see that we saw a lot of selling and then a positiveness coming in. But as you notice, on the daily, you'll notice that price is now trading below the institution, where since August of 2014, in fact, price has been trading above the institution. The candlesticks have remained positive in this aspect as long as price has been trading above the institution. That's changed the moment price got below the institution moving average over here. You can clearly see the candlesticks are still red now. We have seen a pullback. Nonetheless, price is still trading below the institution. So effectively, price is still somewhat negative. There again, what happens on Thursday this coming week will have a major impact on what happens going forward. So there again, just trade aggressively to Monday, Tuesday, Wednesday, and then look to kind of scale back on Thursday. Just stand out, look at what the market actually does, see where the direction is. If it continues to see negativity, then look to see further negative sentiment creeping in. Notice the matrix over here, not a great picture, all over the place, blue and red, no clear direction here, and ultimately that's what we want to see from the market, is clear positive or negative sentiment coming in. And at the moment now, there's just a hell of a lot of indecision, and you can see price has been ranging over the last month or so. So clearly, got to see what happens at the end of the next week coming. That would give us an onset of what's likely to come for the remainder of 2015, and then what we can clearly do is trade out with a more a cleaner picture. So there again, just be patient, bide your time, wait for price action to really give us a true direction of where price is likely to go for the remainder of 2015, and then we can start to look to look for those trade entries, etc. So that's pretty much the 4 majors for the following week. As I mentioned to you, there's a lot of data coming out, and the most important one is going to be that Thursday announcement, Fed fund rate. Please do your due diligence when it comes to the fundamentals. You might have a fantastic chart set up, everything looks fantastic, but the fundamentals drives the market, guys. And most importantly, as I mentioned to you, this Thursday we have some important data that comes out and could have a vital change on price action, because of the fact that for a long period of time prices have been, the interest rate for the US market has remained unchanged, and they're expecting a change. The forecast is for a change. It's not going to happen. They're just forecasting we could see a change. Yellen and his sidekicks could actually come out and say, no, sorry, we're going to keep it at 0.25 for another month or so. So here again, vitally important, because if it comes out at 0.50, that's going to have a major impact on any currencies which is trading directly against the US dollar. So do due diligence. I'm going to leave you with that. I hope you have a fantastic week ahead. And most importantly, please keep it simple and trade serenely.